Good morning, good morning. How you guys doing today? Good morning, nice to see you guys. Wowzers. So, a lot of things taking place in the markets this morning. And I got that CFTC video coming at you this morning as well. After we finish this session, I will be posting that video. So we got a full analysis of the latest set of CFTC data for you. So make sure to check that out after this morning's session, okay? So today, I wanted to discuss gold and the currency markets. And I wanted to take a brief look at the positions held by retail traders and see what the current situation is, because I went into a lot of detail over this past weekend in the EURUSD report discussing the dynamic of what is currently in play. So I don't want to go into too much detail today, but I do want to just briefly glance over the topic and show you what it is that I am looking at, okay? So, let's start by taking a look at gold, shall we? Last time we looked at gold, we saw 61% retail traders were short, okay? Let me get my pen. That was at these highs here. And right now, let's see if that has changed since 55% short right now. Okay, right down here, 55% short. So as you can tell, there's no strong bias. And when you watch the CFTC video, you'll see that the banks are in the same position. No real strong bias right now with their positions. And there's a reason for that, which we discuss in the video. So again, make sure to watch that. So 55% is where things are currently at, and they're below 9,000 lots, around 7,000 and change. So when you look at gold, there really isn't anything to dictate what direction price is going to go in. Now, the last area that we contacted was here. This is institutional demand zone. Price dropped into it. Now we're seeing the rally. Now, the real test is whether or not price wants to move past these highs here. And so far, it looks like it doesn't want to do that. As you can see, price came in, and now we're getting the red candle to the downside. But let's remember what we've been talking about. On the higher time frames, we've had a big rally up in price. And like I was mentioning, what we typically see take place after big rallies of price is we see ranging. And I said May is likely going to be that month of ranging. And what do I mean by ranging? I mean, you know, on the lower time frames, we see price moving up and down. Okay, here's a 4-hour chart. Here's May. Okay, and so far, what have we had? A little bit of up and some down, all right? So May, I am expecting to see this ranging continue. And then April, May, June, sorry, is when I expect price to either break to the upside or break to the downside. So the question is, what direction is it going to break? Well, we can look at the CFTC data and we can see, we can look for evidence to support either an argument that price is going to head higher or price is going to head lower. So make sure to watch that video after today's session, and you'll see a little bit more in depth of what it is that we're looking at. So here's the situation with gold. Now, if we go over to oil, we can see that there's been a pretty decent decline on oil from the highs. And if you remember, this is when the news came out and were reporting that Israel attacked Iran. Now, if you can follow the supply and demand dynamics on the charts, you'd know that this was an institutional supply area here. Major selling from the institutions here. They rallied price up on the news, only to fill in more short orders, and they've been continuing price to the downside. Now, if I look at the supply and demand dynamics on the higher time frame, all I really see is price has got supply above and demand below it. So, I mean, can price continue to drop? Yeah, it can continue to drop, okay? Because it doesn't have any demand until down here in the 69 area, okay? Let's go to Aussie, because I know you guys are interested in this one. So Aussie, here's the thing with Aussie. So if we look at their positions, let's see what they're currently at now. 69% short, but only 5,000 lots. Okay, this is nothing big, nothing big. 70%. All right, so 69. We could change that. Last time I checked, it was 69. Now it's 70 in the same spot. Okay, but 5.1K lots. Okay, so let me show you something here. Let me bring this over here, I guess would be the easiest way. Here we go. So I'm going to click on 4 hour and I'm going to zoom this out. Okay. Now you can see price action up on the chart here. You can see when there was declines, right? You can see there was a decline here, a decline here, and a decline from here, okay? And if you look at the positions, you can see where they were. You just draw a line across it. Between 8 and 16,000 lots, all right? So let's give or take 11 or 12, right? I'd say. Here was 16,000 lots. Now this last drop that we got, that was just a small drop. We were at 16,000 lots, okay? This area here was at probably about 12,000 lots, give or take, around there. 12,000 lots short before the banks decided to push price to the downside. Okay. Right now we're at 5,000. So that's a problem because it's not aggressive enough for a dramatic drop. Okay, we got an initial drop here, but no continuation of the drop. And when you put together the positions of retail traders and you look at historical price action, which I have done, you'll see that we typically need to see a much greater amount of short positions being held by retail traders. So could we see more upside from here? Yeah, it's possible. It's possible. Okay, I do have a short on, and my stop loss is higher up on the chart. Why? Because I knew that this was possible. And how do you think they're going to lure in more retail traders to short? What do you think they do to lure more retail traders to short? They're going to likely rally price up. Okay, so that possibility exists. So that's Aussie. I also want to look at the euro because you can see it's pushing up higher here. And I'm not surprised by this move at all. We talked about this in the EURUSD report. I laid it out in great detail. Bottom line, though, let's take a look at the sentiment with euro. Here she is, okay? Right now, 73%. So let's look previously at this little peak here. It was 74% with 17K short. Now it's at 73% at 14K short. 74% at 17, and now 73. %, and 14.5K. 14.5K. Okay. Now I'm going to just make an adjustment here. There we go. Okay. Now let me open up this. Click the 4 hour. Let me zoom it across. Okay, so you can see price action, right? So let's look at the turning points. That was a massive turning point. Okay. This is 25,000. Look at that, where that peak was, well above 25,000. Okay. Here's a turning point. Look where that peak was, well above 25,000. Here's a dramatic drop. Look where that peak was, well above 50,000. 50,000. Okay. So, you know, when I first started looking at retail sentiment, there were skeptics who didn't really think through the possibilities, and instead of seeing opportunity where it lies, they were very pessimistic, and they were saying that banks don't really care about retail traders. Retail traders take up such a small portion of the market. Looking at retail data doesn't make any sense because, you know, if the banks don't care about them, why should we? Well, do you see how this data is playing a significant role in what is taking place with price right now? Okay. Price is moving higher. And the reason for it comes down to this right here. You can look at it whatever way you want to and analyze it whatever way you want to. But the bottom line is the reason why the euro isn't dropping right now is because they haven't lured the amount of retail shorts that they would typically want to see before dropping price. And that's just not because I say that retail traders are being lured in by banks, and then banks are going to push price to the opposite direction. We have data that proves it. You know, before I was looking at this data, I was coming to the conclusion that retail traders were being lured in by the banks. Why? Because I could see it happening on the charts. I could see the technical analysis that most traders apply to their charts, you know, the conventional technical analysis that you can find in your average bookstore. I could see what, you know, the signals were for entering in a trade, and I could see that banks were luring them in. I could compare the CFTC data and see what the banks were doing with their positions versus what they were creating on the charts to make price look bullish or bearish. And now that we have this information, it's plain as day. Okay? So it's very evident now what is going on, why it's taking place. So again, if you follow the storyline of price, you'll know what's taking place and why it's taking place. So going back to the euro, we got this little drop here, which wasn't bad, but it's holding institutional demand. So that was the first sign to me that we were likely not going to be dropping, is when price was holding its demand zone. So going back to retail positions, 73%, 14.5K. And what we normally see is above 25K or higher for a drop. 25K or higher. 30,000 or around that area, and we see significant drops. Over 50,000, and we see major drops in price. So we're just not there yet. Okay. And so we see price rallying up now on the euro. So that's how it is, right? And let's see if there's any more indications here that we can gather. Let's look at USCAD. Here we go. Let's go to USCAD. And what do we see? 61% short. Drops in price. We typically see positions of around 12,000. Over 8 for sure. But those drops that took place weren't anything very significant. Where's my positions? They just disappeared on me. Where are they? Oh, I was looking at the wrong chart. There you go. So last time I checked 53, that was back here. And now it's now we're at 61% short. Okay. 61% short at 5,000 lots. Nothing special. So let's mark that one up as well. Oops, what did I say? 61%? Yeah. 61%. So retail sentiment, not really showing us much. Okay. In fact, US dollar, Japanese yen right now as well, it's not really showing us much. Let me show you. US dollar, Japanese yen, if we click on that, 80% short, 3,000 lots. That's not a lot. That's not a lot. Okay. You know, especially when you look at the historical numbers, you could just see it. Look, going back. You can see when there were times of big numbers, okay, where those numbers sit. Look where we're at now, okay, below, low, okay, and remember, there's something that just massively took place here. All right, price rallied up really aggressively. The banks used this rally for profit taking on long positions. Okay, if you watch the CFTC videos that I posted a couple of weeks back, you'd see that there was banks are luring retail traders. Okay, at this point here, and then the banks got out of their long positions. Look at the latest set of data. I'll post that video after this session, and take a look at the data, and you'll see it's massively incredible, massively. So right now we got bullish price action on the euro, and until those numbers creep higher and retail traders accumulate a massive short, there's not going to be any major shifts. Okay. All right, ladies and gents. So I think we're good. I think we're prepared. I think you guys have a slight understanding of what's going on here, right? Very good. I'm glad. Thank you for joining me today. And yeah, let's see. I see some messages from you guys. Africa, how do I pay for the school? Well, we take credit card and PayPal. Credit card, debit card, PayPal, all sorts of stuff. Just go to the website and you'll see. Okay, no problem. Thoughts on GME? I had GME open. I thought somebody would ask that. GME. Oh, what? It just disappeared. Strange. GME responding to supply. Look, it rallied right up to supply and dropped. Supply is at $20.19. It dropped to $17.46. So likely the odds are price is going to drop. Okay, those are the odds. Interesting, this GME, isn't it? Yeah. Your thoughts on silver? Let's see silver very quickly. It was strong, very strong. It's in supply, so pressures to the downside. Okay. All right. Very good. I think we'll leave it there, and keep watch for the CFTC video. I'm going to be uploading it within the hour. Okay. So that's it. Take care. Thanks for joining me today. Have yourself a good one. So long.